coming at you on a weekly basis, even though last week I was not able to make a video as I was working through another project. But what a day to be making a video. Today's March 2nd, 2022, and it comes on the heels of the news of Bank of Canada raising their interest rates by 25 basis points to their overnight rate. So we're going to talk about what that means from a real estate perspective, economy perspective, and obviously us as residents and individuals, how it affects our pocketbook. So I'm going to go through a little bit about what the Bank of Canada said today in terms of raising the interest rates and obviously what's expected for the future here in this year. I'll also talk a little bit about what Mr. Powell commented definitely for the U.S. side with the Federal Reserve. In addition to that, just talking about how this affects the bottom line or our pockets. And I'm just going to talk about a little bit what we're seeing in the real estate market. So definitely stick around. There's great information, great facts to be shared. And just a little disclaimer before we begin. This is, again, I'm going to be showing you some facts, a bit of my opinion and my perspective, and obviously you make your call. And I'd love to hear your comments as we go throughout the video. So be definitely sure to comment, and I'm curious to hear what you have to say as well. Even though I'm a wealth management advisor, I also always say seek professional advice when you're obviously working through, your mortgages, life insurance, investments, things of that nature from a financial perspective. It always helps to have a person on your side. So why don't we kick it off here today? So this was the first increase since 2018. As you can see, the Bank of Canada raises benchmark interest rate for the first time since 2018. This is a Yahoo Finance article by Jesse Bains. All of these articles and Twitter threads will be in my description, so you can definitely refer that to any time at your convenience. So let's kick it off. The Bank of Canada raised its target for the overnight to 50%. The 25 basis point, again, is coming since 2018 after cutting to help, the cushion for the pandemic. Since 2020, obviously, interest rates have been lowered. Prices for oil and other commodities have risen sharply, obviously with what's going on in Ukraine and Russia, which is quite unfortunate, and hopefully we see an end here soon. This will add to inflation around the world, and negative impacts on confidence and new supply disruption could weigh on the global growth. We're already facing many supply shortages and shortages of things, like for example, as we know with cars, used car sales and new car sales have been at the highest ever, and this is just another wrinkle in the system as a whole. But again, it's going to affect inflation, obviously the bottom number as well, so they definitely need to do something, and they touch up on here as well. Inflation is here for longer. The Bank of Canada says price increases overall have become more persuasive. All told, inflation is now expected to be higher in the near term than projected in January, said the Bank of Canada. Persistently elevated inflation is increasing the risk that longer run inflation expectations could drift upwards. And Canadian inflation levels, hit levels not seen since 1991, which is absolutely crazy, and up 5.1% year over year. So I'd love to hear your comments before. I'm sure this is affecting your bottom line. When you're filling up gas, when you're going to the grocery store, I see it all the time. I talk with my wife consistently, and I'm sure this is affecting you. So any comments, what you're seeing, I'd love to hear about it as well. Continuing on with the CPI likely to run hotter than we've had expected through the first half of the year. Odds are the Bank of Canada will deliver the remaining 3/4 point hikes we had allocated for 2022 over the next 30 rate setting dates rather than spread out through the year, said Avery Sheffield, who's a chief economist at CIBC World Markets. We expect it to then pause at 1.25% overnight rate to take stock of the direction for growth and inflation, and to let quantitative tightening operate as a tool for adjusting policy before resuming hikes in 2023. So this economist perspective, Avery Sheffield from CIBC expects that would be another 3 rate hikes. So that would take it to 1.25 if that were to come about. But only time will tell, and give me your opinion before what you think is going to be happen for the rest of the year. Rebounding from Omicron, as we know, that was the reason they did not raise interest rates in February. I believe they had kept it at 0.25%. So meanwhile, here at home, so in Canada, fourth quarter GDP growth came in analyzed 6.7%. This was stronger than the bank's projection and confirmed its view that economic slack has been absorbed. The Bank of Canada say it will continue in the reinvestment phase of its Government of Canada bonds while keeping holdings roughly consistent. When to begin winding down the balance sheet or quantitative tightening will be guided by the bank's ongoing assessment. So let's talk a bit about what's higher mortgage rates here. So the Bank of Canada says housing activity is definitely elevated. I've been showing you the numbers, the sales, what we've seen, and I'm sure you've been talking with friends and family, adding to pressure on prices. So rock bottom interest rates have helped nudge buyers into real estate, but that's about to change depending on the type of mortgage. So for those worried about the impact of their wallets, this overnight rate increase will mean no immediate change for those with a fixed rate mortgage. So as you know, fixed and variable. Fixed is you've already locked it in depending on the timeline. Even so, fixed rates are going up, which could present an issue at renewal for those that locked in for 5 year. That locked in a fixed rate of under 2% in 2020 or 2021, said Leah Zankin, mortgage broker at lowest rates .ca expert. Today's variable rates are still very low and it will take multiple increases to push those variable rates up enough to make them comparable to today's fixed rate. So the gap or the difference between variable and fixed is quite a bit. So you're seeing some fixed rates at 2.75, 2.9, 2.65 depending on the vendor, whereas variable is much lower. You can even get 1.4, 1.5. Again, it all depends on the vendor and who's offering the lower and obviously who's on the higher end of that spectrum. But it's definitely going to have effect on car loans, HELOCs, lines of credits, because they're based on the prime rate, and prime is going up 0.5% tomorrow, which is March 3rd, 2022. As Canada or the Bank of Canada did raise, their rate. We also have in the U.S., Mr. Powell has indicated that in March they're going to most likely be increasing to 0.25 basis point increase. So they're right now at 0. They're going to increase by 25. There had been rumors about 50 basis points, but that he kind of called that out today, saying maybe that's not the best approach. We'll take a 25 basis points and take it from there. And again, in the U.S. as well, it's expected to be maybe about 3 to 4 interest rate increases, maybe even 5 in 2022. And that's definitely going to hopefully address some of the inflation, address some of the supply shortages, and overall the economy's running hot, as we can see from the inflation numbers. So definitely need to take put a check on that, because obviously it's affecting everybody. And I'm just a little bit here from a Twitter thread. This is from Steve Zarowski. He's a real estate agent, definitely one of the thought leaders in the industry in Canada. So this is from him. This is a particular article here that's in the Globe and Mail by Mr. Rob Campbell. Noted today's Bank of Canada rate increase will result in a $12 monthly increase on every $100,000 borrowed, assuming variable rate mortgage, of course. And then he just puts a reminder here, subtle reminder that many variable rate mortgage products have fixed payments. The only change we'll see is a reduction of principal pay down. So as you know, for a mortgage, you got the principal and you got the the interest portion. When interest rates are low, you're paying more of your principal off and obviously less of interest. With now this increase, you're most likely what you'll see, you won't see a figure change. Like let's say you're paying $1,000 a month on your variable mortgage, you're most likely continue to see the $1,000 depending on your variable mortgage, but at the same time you'll see less attributed or allocated towards your principal going down and more now going towards your interest. And you'll see that obviously over time, depending on how the Bank of Canada continues to increase. Just a little bit more information I want to share with you here as well. You'll see here Ben, he's definitely another thought leader. He's runs Edge Real Estate Analytics here, definitely in the Canadian housing market. So he said here, most variable mortgages still have floating payments, approximately 60% estimates I've seen. This is a mortgage broker, Rob Campbell. He says, and the HELOCs are a mere dent in interest increase due to simple interest calculation. This 25 basis point increase means $250 more a year in interest for every $100,000 borrowed on a HELOC. So that's 68 cents a day. So that's obviously makes a difference if you have a HELOC, which is obviously a line of credit on your house or just a line of credit, because that's based on the prime rate, and prime rate did go up based on this announcement here today. So you're obviously going to see that difference, and if you want to read through this thread, it'll be here in the description. Comment as well your thoughts on this, as obviously it affects all of our bottom lines. But hopefully we'll see how this goes about, and we'll see how the next increases come about if they do go as planned. And lastly here, this is from Steven. He's definitely, as you can see here from his description, finance, a tech guy. He's, very witty. I love reading his threads, and he's obviously a contributor to Better Dwelling, which is a great resource in terms of what's going on in the real estate market, particularly in Toronto and Vancouver. So again, his description will be in the link. You definitely check that out. So top performing Toronto agents and their mega brokerage is seeing a lot fewer showings, more inventory, and properties are getting one or two offers compared to 20 before. And again, the comment here, the week before the first hike rate, 5 more hikes to go, giddy up. So we're seeing in the last 2 weeks could be a leading indicator that obviously, not obviously, I should say, that we're seeing a bit of a slowdown. Really, the point is, is this going to continue, or is this a little bump in the road, or is this actually the result of what the Bank of Canada has been saying, that, hey, interest rates are going up, so we want you to be prepared for that. And there's a comment here from Nazim Ali. She's a real estate agent and also the broker and founder of One Group, which is definitely, she's very popular on Twitter, and she's definitely, in the conversations on a daily basis. And she kind of confirms what Stefan was saying here, that, it's been about 2 or 3 weeks now that they're seeing this kind of behavior in the marketplace, where we're seeing less interest in terms of offers, and we're seeing, maybe a few more listings, but again, the market is still, quickly taking off great houses off the market. If it's a nice house, good space, good location, it will sell. It's just obviously you're not seeing 20 offers, you're seeing much less, but the price is still holding up, and the months of inventory is still historically low, or at one of the lowest points it's been. So that still doesn't take away, from the fact that interest rates are going up. We're seeing a little bit of a change, but we're not seeing drastic change. But it's something good to be wary of. So that's the video for today. I hope you liked it. I'm definitely curious to hear your thoughts. I love to hear them. Appreciate a thumbs up, even a dislike, or any comments you have. And of course, subscribe if you find this valuable and you appreciate me coming to you on a consistent basis. So with that, also be safe. I hope this information was helpful and helps you plan your budget and where potentially we could be headed in 2022. So talk to you soon. Appreciate your time. Thank you so much. Have a good one.